Hi, everybody. Alexandra, Ren, how are you? Kevin, Brock, everyone doing okay? Dollar under pressure. Arena, how are you? Gold recovered all of its losses. I just have to say one thing. This kind of action that we're getting here in the gold, and then yesterday in the S&Ps where we had this and then recovered. I mean, we're really getting very whippy action. I mean, you just look at the gold and maybe this will help smooth it out. Well, it doesn't, but to me, it looked like we had a classic stop hunt right here. There, you guys are covering it. Where this was like normal rhythmic trading down here. And then really this was, in 45 minutes, they juiced it up here to pick off the stops and then looked like it was failing. So then I sold a fib retracement and I actually got out and scratched it. But you're seeing this type, it almost feels like there's some instability in the market. And, to have this happen late in the session in the S&Ps and then just grind all the way up to new highs, there's really some interday whippiness that almost reeks of instability. Just a feeling I have. Okay, so I don't know how your trading's been going, but oh, here's another example. So the pound this morning, look at this, and you just even if you use a longer TF, look at this, and then this. So be careful. Well, the VIX isn't that volatile; it's quiet. But I'm just wondering if I'm the only one noticing this stuff happening in the markets here, that I haven't seen in a long time. Well, actually, the euro has negated this breakdown. We're right at this moving average here, but I'm taking a shot on the long side of the dollar here at this 38% level. So we'll see. 15-minute is diverging a bit, starting to look like, here was the confirmed low, a little bit of divergence. And if we could pop here, we'll have a little bit more divergence. But I'd always planned on buying it at this 38% level to see what happened. I'm risking 50 points. Okay. And also taking a shot at the gold. I'm short from 1900. We didn't quite make a new high here. This high was 1902.32, and so far it's been 1902.26. So it missed it by about 6 cents. It could still blow through it, but this has a little bit of a three look to me. And this candle right here is like it was hit with a hammer. Oh, I don't know. I could be wrong. I still agree with that, Jess. Yeah. But you know what? I think are the two most interesting starts on the board. I tweeted it out. I shared it with people that I'm working with, and take a look at this. Oops. So to me, it looks like the 10-year has broken out of this triangle. Okay. Now I know Jerome Powell said we're not thinking about thinking about thinking, and I'm fighting the Fed, but you know, this to me looks like a breakout. And check out this triangle, which is a little bit more advanced than the VIX, and tell me if you see similarities between the two. So this is a 10-year yield, and this is the VIX. Does it look familiar to you? Can you see the similarities? See that? See this? So what I'm getting is higher yields. Yeah, I don't know if it's descending. Could be symmetrical. But anyway, they are both similar triangles, and yields are leading the way. So it's saying that we're going to have some higher yields, which is ultimate contrarian position to take. And with that, volatility eventually will increase. That's my interpretation of the similarity between the two of them. Give me why if you get it, if you saw it. I mean, I was surprised when I looked at the two things. Short squeeze or liquidation? Because TLT didn't put in a good day yesterday. And up until yesterday, you know, the DSI was in the 90s or upper 80s. And it sure isn't due to any technical pattern I could see. I don't know why there's that type of euphoria. It should be eventually. Yeah, it should be the correlation. So I think the yen is off a little bit, but you know, I thought the yen, and I still think it can pull back towards the breakout here, 104.90. You know, so it's only 40 pips. So you know what I'm showing you on those charts doesn't have to start immediately, right? Correct. So that's it. That's all I have. Is it enough? Because you know, my contemporaries, they go over everything. They're young, strong, hardworking guys that carry an old guy around. Don't demand too much from me just to interview somebody. But crude, crude. I was surprised it got back over 40. You know that. You know, I thought yesterday this was a flag, and we almost made new highs. This too. I have crystal balls. Oh, a ball. Oh yeah. Okay. Anyway, that's what I see here. S&Ps. Yeah, I mean that S&Ps. This is kind of a big area. Check it out. 3,400, which is halfway, and that's why you know you could have understood. You know, they sold it at the 50% retracement. I'm not sure where 61.8 is. I think it's 34.40. You know, the fib tool. I couldn't get it. Yeah. Oh, okay. Thanks, Nancy. So anyway, I'm looking for about 12.8. I just want to show one more thing. I was trying to get Steve to show it, and it has to do with the stock market, mainly the FANGs. Take a look at this. Here's Apple. I'm going to put up the dailies on this stuff. Okay, so Apple, you can't see it as much because I have this pre, but you know, so far a week, pretty weak. Look at these. We have a bunch of potential head and shoulders formations on the FANGs. So I'm not saying the right shoulder is complete. Symmetry is still higher, right? And I was thinking around 11.8 in NAS 100. So here's the potential head and shoulders. setting up here on Microsoft. Maybe it rallies another 7, $8. Here's Goog, which really pretty weak bounce, very weak bounce. Maybe it gets here, but Amazon really has the classic one. Look at this. So this looks like it's forming a right shoulder too, and we start taking out 2,900. You could be talking about 2,300 on here. Okay, so here's Amazon. I think we're getting head and shoulders in the fangs. Let's see what else. I think I have one more. Facebook's kind of been weakish. Yeah, maybe the same thing here. Okay, so I just wanted to show these, which makes me want to, look for places to short this NASDAQ 100 because, the stocks I showed are most of it. But I still think I asked Steve 61.8's around 11.8 up here. So this doesn't look like a head and shoulders because you don't have a left shoulder, but all those individual issues in it, Facebook has a Batman head and shoulders. What does Robin say about that? Okay. Anyway, I just wanted to show you those stocks, and if they should happen to blow out a right shoulder, they're not going to confirm at new highs, but I think we're going to get a right shoulder. So take a picture of this of Amazon because it's still really the star, right? So symmetry on Amazon would be up at 33.44. So that's another couple $100 if we get symmetry. And it doesn't have to. In fact, um, if it doesn't have symmetry and it's a weaker right shoulder, that's even more bearish. So I'm going to bring Blake in now and see what he's thinking. Now, remember, no, but remember tomorrow's NFP. So, don't be loaded up into the number. How you doing today, bro?
Hey, good morning, Dale. That was that's a great thought as we head into today. Especially with yesterday, we didn't get that the dollar buying at the end of the month that personally I was hoping for, being long dollar Canadian, in it, and dollar Canadian came off as a result. But yeah, I mean the the dollar though is finding some support near where you had identified, and you were just saying a little bit earlier that taking a dollar long down here, or that's what you were thinking.
Yeah.
um Look at the dollar index. This is, before you write off the dollar, just realize we're at the neckline of the inverted head and shoulder pattern. you know this was horizontal resistance. I'm going to get rid of that, actually. But if you look at the inverted head and shoulder pattern, if that's the way you're viewing it, we're basically at
Yeah.
the breakout point, or the neckline, really close to, anyway. And we've been looking for a move down to the 618, and you can see that the dollar index just dipped to the 618. I'm going to have to write down these numbers because we're running a little late this morning. So the dollar index here, support is going to be 93.50, and resistance today is going to be up here. This previous support that should act as current resistance as it did overnight, which will be about 94. But overall, I don't think you want to be bearish down here. I think the dollar index is still bullish. I still believe that we're carving out, a bottom. Now, we did come off the last couple of days, and you're exactly right, Dale. We have non-farm payroll tomorrow, so between the price action yesterday and what's happening tomorrow, it's hard to get too loaded up on dollars down here, or too aggressively short or long the euro up at these levels. But you have to be aware that the dollar index is probably at some pretty key support down at down at this price, right?
Yep.
So great observation.
Oh, thanks, buddy.
One of the other things I just want to mention this morning, you know, you were talking about the cable and how whippy it was.
Vicious.
It was. Now, remember, we're dealing with Brexit here regarding
Yeah.
cable. So, you know, the sterling, it's going to be bouncing all over the place on headlines. And so when I got up this morning, I was like, wow, the FX market's been fairly quiet. Although I hadn't looked at the price action of the sterling yet. All I knew is it was around 129. I didn't know we went all the way down to 128 and then back up again. Or excuse me, we were down here at 128. I knew we were at 129 and then we had dropped to 128 and I'm like, it must have dropped for a reason. And it did, because the EU, there was a report that the EU is taking legal action against the UK for, the breach of the Brexit withdrawal agreement. And Amanda was in our chat room. She was like, it's a bunch of BS. And no sooner did she say that, the cable ripped higher because some Financial Times reporter was saying that the odds of a deal had flipped in their favor. So and then we ripped higher again. So you have to be careful, obviously, with the cable. Now we'll talk a little bit about the pound, actually, where we're at right now. And I would say yesterday here, and by the way, let me take a step back. I'm sitting here telling you guys all about this in about what's happening with the cable. You guys should be in the chat room. If you're a Forex Analytics subscriber, this is us chatting this morning, and I'm just going to go all the way back. This is from, I'm showing you all the way. This is when I got up. When I got in front, it's even further. This is all the chatting that's been going on this morning. I said good morning here, and then Amanda's kind of filling me in what's going on with the cable, and then we start posting charts. That was literally 2 hours ago. You can see all the messages this is how active our chat room is. If you are a Forex Analytics subscriber, that little icon right next to your face or your avatar, that's where you actually log in. Okay. Now, if you want to be part of Forex Analytics, this is the end of the month today.
Yeah.
Well, it's beginning of the month, actually. But we're going to leave our pricing in for this weekend, and that's it. Done, finito. You're going to have to wait till, maybe Christmas, maybe New Year's, before you're going to get a price that's anything even close to this. All right. This is our seasonal offer. So take advantage of it. If you want to learn how to get Forex Analytics for free, at least for a period of time, check out Pepperstone Securities. Go to our Forex Analytics sponsored page. Check out Pepperstone if you don't live in the United States or Canada. Okay. Last thing. This tweet right here, I don't care which tweet you use. I'm going to go ahead and copy a link to this, and I'm going to put it in the chat box. You guys only have a couple of days left to do this, so you should do it now. If you retweet that tweet or a tweet that's like it from Forex Analytics that talks about the seasonal offer, and then you respond to it and say, I'd like to be part of the seasonal or I'd like to win, the giveaway. We're giving away to 3 traders a 3-month free Forex Analytics subscription. And I'm personally going to send you some Forex Analytics gear. So t-shirt, coffee mug, mouse pad. Okay. So that's you can tweet out this link, or you have to retweet it. Okay. And then also respond to it. Okay. I'm done with that. Let's get into the charts. So going back to Forex Analytics though, if you were a subscriber for Forex Analytics, last night's analysis with uh, the cable, okay, you can read here. The cable ended the day on a strong note, and a move to the 130 level resistance cannot be ruled out. The underside of the trend line comes in near the 130.50, which may be good resistance in case 130 level is broken. So here we are nearing the 130. We know that it's key resistance. This is the broken trend line, is the pink line here. And also you can see the 200 period moving average comes in right around the same area. So you should all be very much aware that this resistance coming into, the one, hold on really quick, coming into the 130 level is going to, there's going to be a lot of resistance up here. 130 and a quarter. Actually, if you can see the spike highs here, these all go into 130. Well, that's 130 and a quarter up there. So I'm going to write down 130 cable, 130, and then also 130.50, just in case we get up there. We are in a range. We're in a range while we're above this 200-day moving average. I sometimes I flip to bearish. Sometimes it just depends, because we are below this uptrend line. We did come out of a descending wedge. This is a bigger double top that's developing. So, here's the thing. I think while we're above the 200-day moving average, you got to be really careful being short, because we held that for 3 days and then bounced. So that was a big warning. Don't get short. And then, but now we're back at 130. I think it's a big range. So do I really want to be short right now? No, but I sure as hell wouldn't want to be long up here. And look, you may have a bit different view than me about Brexit, or may have a view in general, where I'm like, well, I still think that there are some risks out there. You may be following the news a little bit closer, thinking there's no way I want to be long the cable. That's fine. But while the negotiating is happening, I'd be a little careful. All right, support down here is going to be at 128 intraday. Let's just get 28 flat. So obviously we're a little bit closer to resistance than support, so just be careful with longs. Oh shoot, back. Okay, dang. Okay, let's go take a look at the euro. So the euro is getting close to resistance here. Resistance, in my opinion, is going to be this. See this trend line here? Getting real close to it. We are at the 38% retracement. I think Dale pointed that out a bit ago. It's 1763. Trendline resistance comes in at 1785. If we're rounded the top or head and shoulder pattern, whatever you want to call it, that's coming in right at the same spot. Okay. So what am I saying up here? We got a lot of resistance. Be careful. Support is going to be this trend line. So it's an hourly chart. That means these lows are going to be really important. Call it around 117. Shoot, I'll just call it down here, because that spike low is at 116.88. I'm going to call this around 117.10. It's going to be support today. I still think we're bearish. Now, one of the things I also want to point out with the euro dollar and with the dollar in general, you guys have to keep in mind that we have probably the last day, if anything's going to get done in Congress and with a trade deal, it's going to be today. Mnuchin is going to be speaking with Pelosi. They're going to try to push this fiscal deal through, and I would say it's probably about 50%. You could argue that, well, both sides need to get something done, but I could also argue that I think the Republicans need to get it done more so than the Democrats. you know, the Democrats don't want to be looked as pushovers. The Republicans really, you know, being that, you know, they're lagging in the polls from the presidential election to a lot of seats. I think they're going to be a little bit more desperate trying to push something through. So, but the Democrats might try to hold the line, and if that's the case, maybe something doesn't get done. I think there's still risk out there, is what I'm trying to point out. So don't think it's a slam dunk. The market seems to, you know, you look at the S&Ps, and the S&Ps think that you know, something's getting done, but as you know, we're running right into resistance. Okay, so I'm just going to say, be a little careful, especially with today and possible news. So let's go over to the Aussie. So the Aussie is at the 50% retracement. I do think that we're at the, by the way, this is the previous channel resistance. Okay, we're already pushing it. So 72.10, we're basically at resistance. I'm going to mark up this as well, just some horizontal stuff. But 72.10, 72.30, is that 30? 72.30. 35. Okay. And believe it or not, while we're still here, I'd be bearish. Okay. Kiwi. Now the Kiwi, it invalidated my trade, and you know, it stopped me out. And the problem with the Kiwi is we have the double top, but it broke back through the neckline. This is the top of the bear flag pattern. We're at the 50% retracement right now. We could go a little further. You can see the spikes here, spike there. So I'd mark up right now at 66.75. Oops, shoot, I forgot this. Okay. I have to flip it back to range because we broke back above the neckline. I still think overall it's bearish. Okay. I have to go back and do the Aussie. Sorry, guys. Aussie support intraday, since we're looking at an hourly chart, 71.50. Kiwi support is going to be this trend line. So by the time we get all the way back down here, if we do, it's going to be 66 cents. Dollar Canadian. Inverted head and shoulder pattern. Now, here's the way I think dollar Canadian is going to play out. You got a lot of people that are leaning on it because they're like, oh, look, the 134.20, big resistance, triple top, breakdown. It's going to drop all the way down. Now it should drop all the way down to 132.15. Remember, this is the neckline right through here. This is a trend line right through here. So I think downside is very limited. I think we might get down to 132.60 if we're lucky. But it's still bullish. Now, we're going to have resistance on any move back up. Well, actually, right to here at 132.20. Actually, it's 133.20. Sorry. But I still think it's bullish. Swissy, or no, I'm sorry, peso. So the peso slipped below 22, the 618, and you can see this previous resistance here. This all is going to come in around 2160 to 2155. I'm going to write down 2155. We are back below 22. So now resistance should be on the move back up to these spike lows, which will be 22.18.
Blake, we got the numbers in 30 seconds. Just
okay. Oh, all right. Thank you. So Steve's power went out?
Yeah, and apparently it went out 30 seconds before he entered the lift, which is good.
The elevator.
Yeah, he would have entered it like 30 seconds later. So good thing it went out when it did. Okay, 10 seconds. Let's have a look. Jobless claims, PCE, core PCE, always important. The
Hold
Fed
on.
looks at that.
This is data flash. This actually comes with Forex Analytics, just so you guys know.
Boom.
There's all the data being released. Jobless claims
Okay.
a little bit better than expected.
Revision a little bit worse. Initial jobless claims better. Revision is worse. Okay, it's a non-event.
Okay.
Core PCE
And, I
is
mean,
not out
nothing's
yet.
moving.
Nothing yet. Core
Nothing.
PCE is not out yet, but I doubt that's going to make any huge difference. No, month on month in line. Yeah.
Hold on. Let's see. PCE still, I mean, I'm surprised personal income and spending hasn't come out yet. And this is what the Fed actually looks at. Oh, here it goes. PCE is in line. I just pulled up I pulled up
Yeah.
Bloomberg instead. Personal spending's down. Personal income's down. Yikes. I mean, we would figure this after stimulus wore off, right? Americans spend what they have, so it's
Yeah.
just
They bought their iPhones, and now what?
yeah. Well, it's like, oh, stimulus money's gone. Now what am I gonna do? I got nothing. I got no money to spend. So anyway, okay. So let's go into where was I? We were doing the dollar mex. Okay, so the dollar Mexican peso, we did slip below 22, and so I'm a little worried that we could come all the way back down to re-challenge this trend line or the 618. I'm really hoping we do. I really want to be long the dollar Mexican peso down here, but any rally now back to 22.20 should find resistance. Let's see, 22.20 should find resistance. I want to, believe it or not, I still think it's bullish. I just think we're going to come back down today a little bit, but overall, I've got to remain bullish while we're outside of that trend line. Okay. Steve says he's opening his Mac book. Does he have power? Is he stuck in the elevator?
No, he's not in an elevator. Yeah, he's not.
Yeah,
He's what?
He's opening his Mac. He said right now.
But he's in the elevator.
No, he didn't get in.
Oh,
Remember?
He didn't get in.
He didn't get in.
Oh,
Yeah.
got it.
He's in his lobby. He's going to work from the basement, I think. Does he have one? Anyway, hey, Blake, I'll be back in a minute.
Okay,
Everybody.
sounds good. Let's go over to the dollar Swiss. Okay, dollar Swiss. The 618, and also you can see this previous resistance here comes in at 91.44. So I'm going to write down 91.50 as support today. Yeah, still is. Tell Steve not to join. There's no sense for him to join. You know, if they're without power, he doesn't need to be on the phone network.
I can tell him, but when was the last time he listened to me?
Yeah, that's true. Good point. Resistance 92.50, and then obviously 93. If I'm not trading the Swissy, as I've explained to you guys, but I will explain to you that I think it's very technical. So do I think that we could come down here and then bounce back up towards 92.50 to 93? Sure, I do. But I don't know, if I don't know why something is moving or how it's moving, I have a very difficult time trading it. The range has to stay until we get above 93. You guys know that. That's because this is the long-term broken trend line in the dollar Swiss. We're still below it. So even though we've spent, a lot of time trying to make the turn, we have to get it back above 93 to turn bullish. Okay, let's talk about the yen. This is my chart of the day yesterday. Now, I'm going to give you guys a better explanation than what I did over on the blog because, well, I'm with you right now, but I want to explain to you my thought process too. Today's an important day for potentially for stimulus, right? Today is the day that if we're going to get stimulus from, and by the way, gold is ripping right now, just so you guys are aware. If we're going to get stimulus, it's going to happen today, I think, because everybody, the Congress is going out of session between now and the election. So if we're going to get it, it's going to be today. Maybe there's a slight chance tomorrow, but they need to push legislation through. So it's probably going to be today, if anything's going to happen. If something happens, stocks should rally. They should, you know, I still think it's 50-50, but if they rally, the yen should weaken. And we have this false breakdown. And if we can clear this 618 retracement right here, so you take the last, you know, down move. I know we've had this fib level here forever, but I'm explaining to you why it's here. Okay. We break that 618 retracement, and which is also previous support, current resistance. We break 105.80. It's also breaking this downtrend line. That false breakout should give us the nice little slingshot effect and, you know, help us rip higher. So if the dollar yen does break 105.80, whoops, not 108, 105.80, it would turn bullish instantaneously. We are in a range, and I believe 105.15 is still support, which is right here. Okay. But the dollar yen, I mean, this is one of those that I'm not expecting necessarily to break out, but if it does break out, I want to be long, right? That's where I want to be. I want to be in that trade. Okay. I don't necessarily need to be buying it right now. I just need, it needs to be on my radar, because yeah, we get above 105.80. We should trade back to 107, maybe even higher. You know, I would think that we trade back to this resistance here and quite possibly even higher than that. So just keep that on the radar. Keep it on the down low too. Okay. That's if a deal does get done, I think that's what's happening today. Or at least we're going to make a run over the next, you know, week, whatever. US dollar Norwegian krona. We are actually slipping in the dollar Norwegian krona down to where we should. Again, if you guys read Forex analytics and you read the basic technical analysis that I do at night, right? Because I do it for all the pairs, all the instruments rather, every evening. Usually it's me. 90% chance it's me, unless I had to do something and somebody's filling in for me. Last night, you know, the 925 level may be tested, which would be the 38% retracement of the recent move higher from the August lows. Look for support here. Okay. You know, last night we were trading at 932. We traded today as low as 925. If you had bids there at 925, you got filled and you're already positive. But this is support. We have other support levels slightly below, which, you know, you kind of got to give it a little wiggle just in case we get down to maybe 920. But I think this 920 to 925 is really good support. Okay. So if it's bullish, if it's really bullish, we're going to hold these levels. 38% retracements typically, notoriously, what's used from a Fibonacci standpoint for extensions. You know, look at the 4-hour RSI is just reaching oversold. So we probably going to find some support down here. Resistance will be all the way back up to 940 if we make our way up there. Gold, like I said, gold's pushing higher. I'm surprised gold's where we're at right now, but we have to respect the fact that gold is back above 1905, or excuse me, you're right above 1905 now. So let's look at it from this perspective. If it continues to squeeze, it could squeeze all the way back up to 9.25, which would be like right here, right? 19, I'm sorry, I said 9.25, 1925. And because we're back above 1900, I'm putting us in range versus bearish. So I'm going to keep us in range. Support right now, since these are 4-hour candles, it's going to be down here in 1880. Okay. S&P. So, like I said, the market is expecting us to get some sort of deal done. If we don't today, this 34.25 level should hold. We're going to make a lower high, and then we're going to turn lower back to 3,300. I think it's 50-50. I explained to you guys, if you're just tuning in now, remember, think about this from a political standpoint. And I'm not playing sides. I'm gonna explain it to you from a political standpoint. The Republicans really need to get a deal done. Trump is probably on the phone right now with Mnuchin saying, do whatever you need to do to get this deal done. You know, I'm down in the polls. We're going to lose a lot of seats in Congress. You know, if this doesn't get done, we need to show the people that we're fighting for them. So, you know, move up from your only going to do $1 trillion to bring it up to 1.5, 1.7, 2 trillion, whatever you got to do. Okay, do it. Then you have Democrats that they wanted 3 trillion, they came down to 2.2. But if you're the Democrats, you know, the Democrats want to do something for the people as well, just like the Republicans do. But the Democrats don't want to look weak either. They don't want to look like they're buckling. I mean, they've already come down to 2.2 trillion. They don't want to go much further than that because they're going to look weak. So the Republicans probably really want to get something done. The Democrats, I don't know if they necessarily need to. You know, they're in the power position now. As an American citizen, I look at all this and say, this is ridiculous. You know, people need help. You know, people, you know, I'm not talking about myself. I'm just talking about the public in general needs help. But politics is being played right now. And that's the fact of the matter. You know, the livelihood for people in the US, around, you know, the United States, relies on two parties jockeying to make themselves look better. Right?
It sounds a bit like Brexit.
That's the crap that politics is. So, and again, this is not, I'm not playing on the side of Republicans or Democrats. I'm just saying that's the crap world we live in. Now, the reason why I point this all out is because, do I think getting a deal done is a done deal? No, I don't. I think the Republicans can maneuver a little bit further, come closer to where the Democrats are at, but I don't know if the Democrats have the incentive to really move much further. Do I think a deal is going to get done? I think it's 50-50. So that's why this is really important, why I'm pointing out the S&P. We could go to near all-time highs again, or we could epically fail back to the 200-day moving average, which would be, you know, down here at 3,100. And the it's not so much in the technicals, it's in, you know, it's in the hands of the politicians. So the way I think we have to look at it is your risk reward to be short actually is probably decent from current levels. Okay. Because you're off sides or you're wrong on a move above 34.25, right? So the risk reward pays better to be short right now. I don't know if that's the right trade. Only time will tell, right? It's not, It's not. I wish I had. I wish
I'd
I
like
had
to
the
see a
crystal
deal
ball.
and sell into it, Blake.
Huh?
I'd like to see a deal that the market likes and kind of buy the rumor,
Yeah,
sell the fact.
and then Dale, maybe what happens is we squeeze past the 618 here and back up to the 786. We do a a lower high and then fail 3,500 next week. That's probably. I don't think it's going to spike and come down unless the
Yeah.
deal is. Oh, here. Let me take that back, Dale. Let me map that out for you really quick.
All right.
Let's say a deal gets done, but it's only 1.5 trillion. I don't think the market's going to be satisfied with that.
Okay.
That would be the lower end of expectations, right?
Yeah. Yeah.
So I think that you might get what you were just saying. Deal gets done, spike above 3,400, and then down. That I
just
think,
clean out the stops to the left.
yeah,
I'm
and
sure
that could
there's a lot of
happen.
yeah.
That could happen on a light deal, a deal light. Does that make sense?
Yeah.
So okay. So I'm glad you brought that up.
Forex Analytics Light. So the Congress knows that we have a light product and they're just copycats.
I'm going to keep the S&P in range right now, although I still feel that we're going back down towards the 200-day moving average. I'm going to keep us in range for right now because we're, fighting this. Where in the hell are we going to go from here? Okay, so there's your bias chart. We have only 15 minutes left. Stelios, I think I should give you a chance to speak. Hopefully Steve didn't log on because he's on a phone. He tapped. Yeah. He's on a string with a cup.
we should have bet.
You had those phones too, huh, Blake?
Of course I did. How do you think I communicated with the girl next door? Just kidding. All right.
Unfortunately, from experience, I know that the protocols, all the security protocols of these applications like Zoom, they don't work well with 3G and 4G connections.
Well, Steve, you shouldn't even be here, but thanks for tuning in. We appreciate you making the effort. We're glad that you're here, and hope your power comes on soon.
And Steve, we have a deal if you want to sign up. Good prices.
Does the deal include some electricity in the area? I'm definitely going to pay for it.
You got a generator, bro.
All right. So since Stelios has actual power today, Stelios, maybe you can shed a little light on what's happening with Brexit.
Stelios lives on the good side of town.
So, Blake, you mentioned it. I think, first of all, you said it. Von der Leyen, from the EU, announced that they're starting legal proceedings against the UK because of the amendment of the bill that they passed, basically, which changes what was agreed in the withdrawal agreement. But there was also, like you said, a report that things are really moving and fishing is the last sticking point. And interestingly, we have a friend in our chat room who's Norwegian, and he said that, look, Norway tried twice to talk with the EU, and both times, the EU, one of their main points was we have to allow EU ships to fish in your areas. And the Norwegians said, no, thank you. And that was that. So this issue seems to be really, really big. So will it get resolved or not? I think eventually things will get resolved. And my thoughts are, when you're a politician, one of the main tasks that you have is to be a diplomat. So you have to find solutions to problems. The problem is that both sides want to show to their people that, look, we're playing hardball, we're trying really hard, we're going to get concessions from the other side before they actually announce that they have agreed something. So that's my view. And I still think they will find some kind of agreement. Is it going to be a good one, a bad one? I don't care. But I think they will. So I think we're seeing the last days of jockeying around and trying to make headlines and this and that before they shake hands and agree on something. You might say I'm wrong. I could be wrong. I've been wrong many times in the past, that's for sure. But that's my view on how things are going to end up. So Brexit for sure is hotting up. cable and Europound are ridiculous in terms of daily swings. Amanda has been absolutely nailing it again. I mean, it's a machine. She's a machine. Sorry, I said
Yeah,
yeah.
it's crazy, you guys. I mean, if you're in this chat room, I mean, we have his name Tadaway, who's from Australia, who was in this morning, and he was just like, yeah,
he called her a freak. He said, "You're a freak."
You're a freak, but that was in a good way. I know she's
Yeah.
like, I know she's listening in right now.
What a find!
It was
when you guys
what do you
found
mean?
Amanda.
Like, no, it was a freak in a good way, because she was just a machine in there. So anyway, again, that's the chat room. And hey, Benedict, Benedict is I don't want to explain what bank he trades at, but he's a good friend of ours.
I don't know where you guys found Amanda, but
probably I want to say maybe 6-7 years. He actually sent me my little Chinese. He went to China about 5 or 6 years ago, and he sent me some little mini statues of the. Oh crap! What are they called? They're actually behind me right now. The little oh god, warriors. Oh help!
I have no idea.
The ones that were found underground, in rows and rows and rows. Dang, what are they called? Anyway.
Oh, is it the army that they found? Is that it?
It's the
Terracotta
Dead
Warriors.
Sea Scrolls.
There you go. Yeah. Thank you, guys.
Thanks, guys. Holy cow! I just couldn't off the top of my head because it's 5 a.m. But anyway,
yeah.
Benedict. There's a lot of traders. The point I was trying to make is Benedict and I have been chatting for probably 7 years, but there's a lot of traders that have been in there for over 10, 12, 15. Rick and I have known each other for 15 years. So yeah, it's crazy. All right. And that's where you're going to find us throughout the course of the day. So, what else, what else is on your radar, Steve? Or Steve Stelios? Well, you can be Steve.
Don't you ever call me Steve again. I mean, otherwise, just to sum up what's happened, otherwise, we had some data. PMIs from Europe, they're actually softening a little bit. You know, we had this nice rebound from the lows of March and April. That was expected. They did rebound, but now they're kind of softening a little bit. So, you know, we're going to have to wait and see how things pan out. And we've said this so many times, what kind of permanent effect or semi-permanent effect COVID has had. So because people tend to dismiss it, oh yeah, we're back to normal. Well, you know, it's not that simple. So that was it data-wise. And otherwise, I mean, the main issue still remains the US elections. And following the debate yesterday or the day before, when was it? Nothing is clearer. Trump seems to be slipping a little bit in the polls, but I think we can all agree that it's going to be pretty close going into the elections.
And that's so one of the other things, and I talked a lot about this in our chat rooms, and I'll mention it to you guys, is you know, if you're wondering why the stock market bounced back yesterday, following the debates, is because Biden's lead not only maintained, it actually widened. And so when you look at, you know, the market doesn't like uncertainty, and we've expected as we're coming closer to the election, we'd expect the polls to tighten, but they haven't. And because of the debate the other night, the polls are actually widening slightly or maintaining, depending on what poll you're looking at, obviously. And I have a hard time believing polls as it is, but the market looks at whatever it looks at. It's kind of like, you know, oh, Chinese data, I don't believe it. Well, it doesn't matter if you don't believe it or not. The market's looking at it and it's responding to it. So, you know, you could say, you know, screw Chinese data. Chinese data is a bunch of crap, and I'm never going to look at it ever again. That's fine if that's your opinion, but the market's still going to look at it, and the market's going to move based on it. So, you know, make your decision. That's fine. You can look at the polls and say the polls are a bunch of rubbish. It doesn't matter. That's fine, but the market cares. So the market right now is stable because they feel that, the polls are maintaining. If they close up and you start to see Trump close that gap a little bit, you're gonna see the market volatility pick up a little bit. So right now,
I wonder, Blake, what is the threshold over which Trump will not contest the elections? I mean, having to do with the electoral college.
I don't think there is one.
I was reading a Goldman Sachs piece yesterday on the states that we have to watch. Pennsylvania, Michigan, Florida, Arizona. Actually, I gotta look. There's a couple other states that we need. North Carolina. There's some states that really are on the radar, and it's kind of like, North Carolina is behind the curve as far as voting goes, so they might take an extra week to tally up everything. But Arizona, where I live, most people already have their ballots and they're already casting them, mail-in wise. So Arizona might actually have the results by the election day. The thing is, and the reason why this is important is because if these are like states that are on the fringe of turning red to blue, blue to red, these are the ones that it's like, okay, if these couple states are taken by Biden, then it's going to be really the chance to become very, very slim for Trump to actually win. So
guys, healthcare is
an easy question to answer.
Can you guys hear me?
Yeah.
Oh, okay. All right. Just one thing I wanted to mention, because I've been there with pre-existing conditions where Obamacare actually saved my life. But a new factor in this election is not just the handling of COVID, but with 7 million cases of COVID in the US now, every one of those people now have a pre-existing condition. And if that isn't written into healthcare law, they're not going to be able to get coverage. That's 7 million people that, are thinking a lot more about who's going to take care of me with a pre-existing condition.
Yeah, and you know what? That is actually really that's important to realize. I was actually talking to a friend of mine. She's a doctor. She actually, was a family physician. She actually got into medical administration for hospitals, but she's still a doctor. It's like I think after 20 years of being a physician, she kind of made the switch type of thing. She was explaining to me last week about how that is going to be an issue. She's like, if you got COVID, that is going to be a pre-existing condition. That's how insurance companies are going to view that moving forward.
Wait, Blake, under all circumstances, and I'm asking that because there are people that get COVID and die, it's a fraction, but still. There are people that get COVID and get some serious side effects, and then they do have some lung damage, etc.
They don't know what the long-term effects are. So the insurance companies will err on the side of safety for themselves, and they'll say, well, that was a pre-existing condition. Whether you believe oh, I had COVID, 3 years ago.
They don't want the risk. Yeah.
They're taking on the risk. They're going to be the ones that they're underwriting these policies. They're going to be like, oh yeah, you had COVID 3 years ago. I don't know if you're going to get, if you had lung tissue damage from 3 or 4 years
large
ago.
Heart, kidney
I don't want to pay for
damage,
it.
All of it.
Right. Or you're going to have to pay higher premiums because you got COVID at some point, so.
You could only get a catastrophic policy in that case, and it's very expensive and covers.
But those are big issues. Those are real world issues, Dale. And I think
it's a new one.
Yeah, it is. I know you have a guest coming in, so let me mention.
Well, I don't know. I'm a little disappointed because he's with Nordea FX, Nord's Andreas Steno. Andreas, are you here? Because I can't find you.
Okay, well,
all right.
Let me mention this while you're looking for Andreas from Nordea Bank.
Yeah.
let's go ahead and I just need to mention, and I'm gonna turn it over to Stelios and Steve here in a second. I just need to mention, if you guys have not taken advantage of the pricing that we have, I know I mentioned earlier, do it, because this is going to disappear after the weekend, and then you guys are going to be like, oh, what do they get the price? And
don't live in woulda, coulda, shoulda land.
There you go.
You need to do it
and then
now.
also, if you haven't entered in our giveaway, all you have to do is retweet this tweet, or not here. I'm sorry, retweet this tweet, or one like it from Forex Analytics that talks about our seasonal offer, and then also respond to our seasonal offer and say, put me in the giveaway, and then you're going to be entered to win 3 months free plus some gear, and we're giving 3 of those packages away. So and if you're a subscriber, you enter anyway, because we're gonna add it to your subscription. All right, guys. Stelios, Steve, I'm gonna pass it over to you guys.
Stelios isn't here, mate. He had to pick up his daughters.
Well, you know what? I guess I'll just Dale, are you here?
Yeah, I'm here, buddy, and I can't find Andreas Stenos. So
okay, well, I'm gonna pass it over to you, or let you take over, Dale.
Okay.
I gotta roll out. I gotta get to the markets, but
okay, Blake.
I'll let you and Steve talk and chit chat a little bit.
Okay.
All right, guys. Have a great day.
Bye, mate.
On the daily roundup, for those of you that are Forex Analytics subscribers, I'll see you in 4 hours on the roundup.
Okay. Hi, Steve. Are you capable of showing charts?
Yeah, I'm just uncertain how it's going to work. I mean,
okay.
We're probably going to we might have some, periods that, connection goes off or whatever.
Okay. Well, then just, you could keep it short. Okay.
Yeah, so I'm on my MacBook on a mobile connection.
Okay. The charts look clean. I tell you what, you guys have any questions on any instruments that Blake hasn't covered, I haven't covered, Sal hasn't covered?
You remember this from yesterday?
Yeah. Are you booking it here, or you're waiting for 3420?
Already limited out.
Oh, okay, nice. So you got your price at 50% up there, because that's what it was. Yeah.
I got almost 70 handles.
Nice.
So not bad.
Let me know when you short it.
No, I'm not thinking of sorting it anytime soon. As I've said many times, I'm afraid that this is a period that it's very risky to short. I'm pretty sure they're gonna want to throw a lot of headlines, try to spin everything as positive news, so on and so forth. So I'm not looking to be short. I'm not saying
the only reason I am is because of the formations that are popping up on the FANG stocks.
Might be the case, but this is still what I see here in the S&P. You remember we talked about it on Friday, and then we talked about it yesterday again. So I don't see technically anything that tells me that we're about to turn lower.
Well, what about if this whole thing down was A, and now we're getting a B, maybe you say to 34.50 to clean out the stops, or 61.8, and then we have a C that's equal. Is that possible?
Yeah. Yeah, we already had an ABC here. So
yeah, for A.
Yeah, nothing is unlikely, but as I said, I'm not I'm not willing to take the other side of the market at the moment. Not ahead of the elections. We know that.
I have a homework assignment for you. I want you to look at Amazon tonight and tell me what you think tomorrow.
We can have a look at it together.
Okay, do it now. Yeah. The daily.
Let's see. Yeah, I haven't had a look at it for quite some time.
All right, draw the neckline.
Yeah, I understand what you mean.
You know what I'm saying here, man? That looks like it's coming out of a textbook.
A lot of possible terminal formations, that's what you mean.
Yeah. There you
and
go. Yeah.
and potential like top informations, consolidations, etc. Yeah, but we need more evidence. For example, in the case of Amazon that you mentioned, 2,880, a super important level.
Yeah, right.
Now, on the other hand, if you want to be on the short side, there is also a clear level here. It's this 3,250.
Right.
Quite a substantial resistance area. So that might actually do the
That's what I'm
trick.
thinking.
So
Around 11.8 in the NAS 100.
So more or less like something like here, like what I'm showing at the moment. So it's a pivot area for Amazon. Okay, what else do you want us to have a look at?
I think Microsoft kind of looks like that too.
MSFT, let's see. MSFT, yeah, it looks like it indeed.
Yeah,
it does. Same deal, more or less here.
Yeah, that's what I'm saying. They're popping up in all the FANGs.
Yeah, but also,
and some of the rallies are pretty weak, like Google. Anyway, I'm just saying. I'm just an observer.
Yeah, let's see. Let's see what we get.
And the gambler.
Listen, valuations are stupid, right? There's no question about it. Fundamentally speaking, the situation is horrific. There is just a good, I'm very much in favor. I'm going to be very actively looking for short positions post-election, because I think that post-election, no matter who gets elected, at some point we have to face the music. Plus, post-election, it's the easiest period of time for a president to take things seriously, meaning give priority to what really needs to be done instead of what looks good. Because
this is not going to be a typical post-election.
That's an assumption. We have to see. Yes, I can agree to the following. It has a high chance of not being a typical post-election.
Well, we've never had a president before the election saying he's going to contest the results if he doesn't win.
Yeah, but
it's never happened.
For the time being, it's just words, right? For the time being.
Well, they're words that have never been spoken about our system.
No, I'm not saying it's not important. I'm saying that for the time being, I'm just saying that for the time being, it's just words. That's what I'm saying.
Yeah.
It's going to be practically important if there is some action taken, according to this. Until that happens, it's just words. And who knows? I mean, Trump might win, in which case, Biden said at least the other day that he's not going to contest it. There is a chance that Biden is going to win with a large margin, in which case I'm pretty sure that Republicans are going to push Trump not to contest it, because it's just going to be ridiculous and, going to make them look bad. And obviously, if the margin is big, then even if they contest it, the chances of getting something out of it are going to be marginal, if not zero.
Yeah.
So, for the time being, we have words. Yeah, inflammatory words, in a sense, can cause damage. Only saying that does, put a question mark having to do with, procedures and everything else. But as I said, for the time being, it's just words. So, I mean, yes, there is a much higher scenario than any time in the past that we're going to have a, turmoil period following the elections, but it might as well not be the case, right? In any case, even under the best case scenario, that's my point, is following the elections, some hard decisions will need to be made, because at the moment, nobody wants to take hard decisions, because Democrats don't want to alienate possible voters and Trump wants to get reelected. But for example, we currently have a regime under which the vast majority of the period, with the problem that so many million workers had lost their jobs, many of them got paid more than they did while they were working.
Yeah.
That won't continue following the elections. I can assure you about that. So a lot of decisions that are actually going to let the economy show its real weakness, because don't forget we are in a recession, and we are in a recession that has depressionary characteristics. Just things are being held up by the fact that the vast majority of the people did not lose their purchasing power due to the trillions and trillions of dollars that were thrown to them. So following the election, that won't be able, to be sustained for a long period of time. Anyhow, any other requests, Dale?
No, not much. Everyone's talking about the election now. WTI.
WTI. Sure, let's have a look at it.
Nat
So here it
gas.
is. Here it is. Still in a range. I mean, I'm looking at this consolidation, and it looks to me very likely that we're never going to get another leg lower, and we might just do this. Very hard to trade at the moment. Very hard to trade at the moment for two reasons. One, I don't like to buy it at this price. I was willing to buy it lower, and I don't want to change my plan. But of course, I'm talking about my personal perspective, right? Somebody else might have a different opinion here. So I'm not willing to buy it at this price. But on the other hand, being so resilient that it is, I'm not willing to sell it either. So, having to do with my personal point of view, I'm not doing anything with it. I'm willing to buy it, but lower. Having to do with natural gas, beautiful rejection from that 290 area. My feeling still remains that eventually natural gas is going to break through 290, and that's probably going to produce another explosive move to the upside. Looking to see how soon we stabilize, because the last 3 days, the last 3 days that we were moving higher, before we found that high, you don't see explosive moves like that on a daily basis. So I'm inclined to believe that it's going to continue higher. I'm just not sure what the level is. We're currently testing a support area here at 250 something. Let's see if that works. But ideally, I would want to see a little bit lower. It would be great for me if we saw 2.2 before we move higher. Any other question, Dale?
Nat gas.
I just covered it. Where were you?
Silver.
Okay. Let's have a look at silver.
I'm still recovering from the summit. And you know
exactly
what? It
you-
wasn't such an easy walk down after climbing all the way to the top of the summit
True.
and then
very
having to
true.
walk down. I'll tell you.
So I still see the possibility of a little bear flag here, which would imply another low.
Have you noticed
but-
how much weaker it is than gold?
Yes,
The gold
in
silver
gold,
ratio
yes. That's why the
rallied
gold
like
silver ratio
Pinker
is,
called it.
yeah, that's why the gold silver ratio is finally, after like a massive move lower,
Yeah,
it's finally rallying. Here it
Yeah.
is.
I think it gets to 93.
This was
90,
probably, I need to go back in history, but this was probably a record depreciation for gold silver ratio.
Oh,
the
yeah, it
speed and
was.
extent was like unbelievable.
Never happened before.
Unbelievable. We seem to have broken out from this descending channel. We seem to be consolidating at the moment. So technically speaking, the gold silver ratio seems like it wants to at least make one more move higher.
All right, one more. It's a crypto altcoin called Kitty Coin.
You're kidding me, I guess, right?
Puppy
because-
coin.
Because with crypto people, I wouldn't be surprised if there was a kitty coin or I don't know, whatever. Really, nothing would surprise me.
Oh, there was a dog coin.
Oh yeah, there is a dog coin. Yeah, I can tell you that.
Oh,
much.
I want that one.
Yeah, there is a dog coin. I
Does
remember.
it come with a leash?
so you don't lose it. So they don't steal it from you. Yes.
Anyway, I think we could wrap it.
Okay, perfect.
All right, one more, copper. Which
Copper,
is pulling
yeah,
back.
actually,
Yeah.
actually,
Yeah.
something that's a good suggestion because
can't not give Forex Gal her due. Oh yeah, it looks like it's
and
gonna break.
something, it's a good thing that she asked before. It's a
Yeah.
good time for an
Yeah.
update in copper. I had already talked about copper and its possibility of breaking down before it did. It clearly broke down. Now, what do you see here, Dale?
Flag.
Yeah. So, and look at today's price action so far, right?
Yeah, it looks ugly.
Looks very ugly. So at the very, very, very least, I mean, the best case scenario for the bulls, I would expect, let's extend this,
28.
an equality
280.
extension towards 280, what does it say? 283, 284.
Good call, NG. All right.
Yeah. So I think that from a risk reward perspective, against yesterday's high, copper looks very, very appealing for a move towards, let's call it 285, because it's the middle of this horizontal support area as well. So I think it looks good. I mean, the risk reward is better than 1-to-1. And if you're looking at it from a short-term perspective, you're in the direction of the trend because we had a sharp move lower, clearly a corrective rebound. I mean, this is a textbook corrective rebound. Nothing is 100%, but I have quite a high confidence that this is going to prove to be, a short-term corrective rebound. So I'm expecting at least one more leg to the downside, and you never know. I mean, sometimes you expect something to start as a little correction,
Yeah.
and on occasion it might unfold to something much, much bigger, right?
Yeah, it might be a sign for the S&Ps. All bull markets are roofed in copper.
Yeah, although admittedly,
Although I've lost a lot of money on that when copper was in a bear market and the S&Ps kept going up.
exactly. Although admittedly,
So-
there's been periods of time that the correlation completely breaks down. So people have to be aware of that. Yeah.
Okay, buddy.
Okay, Dale. Still no.
So I got it.
electricity,
I
by
have
the
a
way.
great guest tomorrow. This guy, his wheelhouse is predicting the election outcome. So we'll have an interesting
That's
interview
going to be
after
interesting,
NFP.
actually. Yeah, given
Yeah.
the and
It's
and
his whole career. I mean,
So I'm assuming he's what, a statistician? What
Yeah.
is he?
Yeah.
Okay.
And he has his own formulas and everything. A previous guest recommended him, so I figured, what a great time to get a guy in here.
It's there's no better timing than this.
And someone
this month.
earlier, I think it was Rick, said I was negative. I'm not negative. I bought the dollar today, and I shorted gold. So I don't like the gold, but the dollar might turn anyway. So that makes me very positive.
You know that every time you short gold, a kid cries somewhere in the world, right?
Really? I didn't know. I'm not going to do it anymore. Now you're how sensitive I am. All right. I'll go short silver then. All right, buddy. Don't forget, hit him with the tagline.
Yeah, don't just count your pips, count your blessings.
And I hope you get your power back on, buddy.
Yeah, I mean, the question is when, not if, because this is already ridiculous.
Yeah, go over to Stelz.
Okay, Dale, and everybody else.
All right, so we'll see everyone tomorrow. Trade the NFP live with us tomorrow. Okay,
Have a
everyone.
wonderful rest of the day. Bye-bye.
Yeah, see you, bro.